Here's a brutal truth about your mortgage you don't want to hear. If you're planning on retiring in 10 years but have 20 years left on your mortgage, you're not retiring, you're working for the bank still. Most people think that long-term debt is just the only way that it works. But that's exactly what the banks want. They want you paying them back over decades, throwing away hundreds of thousands of dollars in interest back to themselves. My name's Sean Uehara. I've been a mortgage lender for almost 20 years, and I teach you how to beat the bank at their own game. So if you're tired of getting ripped off by the bank with tons of money going out towards interest, save this video and follow me because I will show you examples of how we help our clients use a first lien HELOC every single day. The goal for this client was to retire in 10 years, but he wanted to renovate his home and get himself into a position so that way he can truly enjoy his retirement. The problem is he's got 20 years left on his mortgage, so we got to fill that gap and get this home paid off faster. So he currently owes about $100,000 on his home, but we're going to do a cash out refinance, give him about $100,000 at closing. His current mortgage is at 4.375%, and he's had this mortgage now for 10 years. He brings in about $4,000 a month. That extra $100,000 that we just took out, we're going to sink that back into the line of credit because he's going to need probably about 40 grand to do his renovations in the future once he's ready. Now remember, all we treat the HELOC is just like a checking account. Whenever we get paid, money goes into the HELOC, it pays our loan balance down dollar for dollar, which lowers the interest charge for the month. The excess cash that's left over lives on the line of credit, and you rinse and repeat this process over and over again. You always have access to the line of credit. You have access to it for 30 years. So in most cases, you're creating more equity and more cash available to yourself in the long run. Now, after he pays all his bills for the month, we've got about $1,000 left over after his $4,000 deposit. This gives his current mortgage here 20 years left to pay it off. Total of $300,000 being paid between his principal and interest. But again, we're going to refinance that $200,000 mortgage into our HELOC. Pays home off in 4.5 years, which would be 54 months, and we're saving him almost $80,000 in interest. Our HELOC rate today is 8.3%, but remember, we calculate interest on a daily basis on the HELOC, so every deposit lowers our interest, which lowers our cost. He's projected to only pay $21,000 of interest over the life of the loan, which gives us an effective APR of 0.69%. That's the real cost of what it takes to pay back this mortgage, not that 8% interest rate. And if you still think a low interest rate is the best way to go, you can see here in 54 months, our loan's paid off. If he stays in his current mortgage, he would still owe $168,000 because he would have only paid down $31,000 on his home. This is going to get our client to pay his home off in about half the time of what he normally was thinking about his 10-year due date for his retirement. He's going to fix his house up and get himself into a better spot. If you keep doing what the banks want you to do, which is pay your mortgage, stay in debt for 30 years, do you really think you're going to get a different result? If you want to learn how to beat the bank, just like I showed you how this client's going to pay his home off in 4.5 years, send me a DM and I will teach you how to do this so you can start building some financial independence today.